Hey everyone, welcome back to the channel. Today we're breaking down what's really coming for the US economy in 2026, from interest rates and inflation to jobs, taxes, and your personal finances. If you've been wondering, will the Federal Reserve cut rates? Is inflation finally coming under control? And what does it all mean for your wallet? Stick around, we're diving into what experts are predicting and what that means for you. Part 1, the big picture. Let's start with the big picture. The US economy has gone through a roller coaster since 2020, from pandemic shocks to inflation spikes and aggressive rate hikes by the Federal Reserve. Now, as we head into 2026, most economists expect moderate but steady growth, around 2 to 2.5% GDP for the year. That means the US isn't booming, but it's not crashing either. We're entering a stabilization phase, slower but more sustainable. Part 2, inflation outlook. Next up, inflation. After years of price hikes hitting everything from groceries to gas, inflation is finally expected to cool down. The Federal Reserve's long-term goal is 2% inflation, and 2026 might be the first time we actually see it close to that number again. However, prices won't drop overnight. Core inflation, that's everything except food and energy, could remain slightly higher, around 2.5 to 3%, because of global supply issues and ongoing trade costs. Still, the message is clear. Inflation is easing, and that's great news for your everyday expenses. Part 3, interest rates in the Fed, 230 to 30. Now let's talk about the Federal Reserve, the central player in America's financial story. In 2024 and 2025, the Fed raised rates aggressively to fight inflation. By 2026, many analysts expect 2 or even 3 rate cuts as inflation comes under control. That means lower borrowing costs, cheaper home loans, car loans, and credit cards. If you're a homeowner or planning to buy property, this could be your opportunity to lock in better rates. But the Fed will move slowly. They don't want to spark another wave of inflation soon, so expect gradual cuts, not sudden drops. As an income. Taxes are also set for a few changes in 2026. Several temporary tax provisions are expected to expire or adjust, which means some Americans might see changes in their refunds or paychecks. There's also discussion in Congress about extending certain tax cuts for middle-income households, though nothing's final yet. If that happens, it could mean more take-home pay for millions of workers and slightly stronger consumer spending. Part 5, jobs in the labor market. The job market has been strong for years, but experts say 2026 could bring a cool down. Unemployment may rise slightly, possibly reaching 4 to 4.5% as companies slow down hiring and focus on efficiency. However, sectors like technology, renewable energy, healthcare, and AI development are still expected to grow. So while the pace of hiring slows, high-skilled jobs and digital roles will likely remain in demand. Part 6, stock market and investments. 5. What about your investments? After a strong finish in 2025, Wall Street is cautiously optimistic. Analysts believe tech, energy, and green industries will lead market growth in 2026. But here's the catch. Volatility will continue. Interest rate changes, global politics, and election year uncertainty could create short-term swings. For investors, the best strategy might be to stay diversified, keep long-term goals in focus, and not panic over short-term market noise. Part 7, risks and uncertainties. No forecast is perfect, and 2026 has its share of risks. Renewed trade tensions could raise costs again, a global slowdown could hit exports, and policy changes from Washington might shift investor confidence. Still, most economists agree, there's no major recession on the horizon, only slower but steady progress. So, to sum it up, inflation is cooling, interest rates may finally start dropping, growth is steady but slower, and your money could go a little further in 2026. It's not a boom year, but it's a balanced, rebuilding year for the American economy. If you found this video helpful, hit like, subscribe, and turn on notifications for more US finance insights every week. Thanks for watching, and here's to a smarter, more secure financial future in 2026.